All right, Bitcoin chart, please. All right, so this is my current Bitcoin chart. I haven't touched it since Monday, so we've broken down out of this. It wasn't a super confirmed bear flag anyway, but I had it on there. You know, you can see those trend lines are still being respected even from the downside. So I'd say I'm not the only one who was seeing that sort of idea. But the fact that we've already broken down and really haven't had much of a retracement. So currently my fibs are running the whole pivot, right? But even if you just look at the pivot from this, so I'm talking just this drop rather than the entire drop. Even if you just look at that, right, we only made it back to the 50, and then we've sort of rejected. We've made a lower low when you compare it to here. It's not a huge lower low, but it's not great. And so all these things, they really feel bearish for Bitcoin. You know, really after a sell-off of this size, you'd want to see a kind of a decent retracement, because you know, if people are buying the dip and doing all those sorts of things, you're going to see that buying pressure come in. But we've had two big dips. You know, we had this huge dip here that barely retraced, just had a bit of a consolidation. That got to, because of that wick, it actually might have been, you know, a decent fib level. But where are we? So, you know, that only got to the 38. So that's you know, fairly bearish. And then now that we're down on the next leg of that dip, we've only got to the 50, and that's of the sort of, that is not what I wanted to do. Where are my fibs going? That's better. So we got to the 50 of the 4-hour drop, and we got to the 38 of the daily drop again. So those are pretty bearish signs. The fact we've already broken down out of that bear flag without getting up to these levels, it indicates there's really not many buyers in the market at the moment. Now, we haven't broken down completely, right? Until we eat this demand zone, it's not... until we eat this demand zone, right, we're sort of just consolidating. But the fact that we haven't seen much of a buy up after these big harsh sell-offs really doesn't bode well for Bitcoin in the sort of mid-term, in my opinion. So, you guys, how do I confirm my zones? All right, so I don't confirm my zones. The market confirms them for me. So how I draw them is, this is a good example. So, actually it's not the best example, but we'll work with it. Okay, so my favorite zone on the chart right now is this one. And the reason for that, so how I draw it first is, let's pretend there's nothing there. So I look for pivots, right? So that's what this zone up the top is. It's the extreme of this pivot. So price came down, came up a bit, came down again. So that pivot is a really good zone. The other thing that I really like to look for is changes in market structure. So, or not even necessarily changes, but like where market structure was created. So I was talking about this on my Monday call, I think, and I think even last week. This level here held really well, right? You can see there was plenty of support there from buyers. So when that broke, right, this candle here, that's when I go, okay, we've had I call it a change in market structure. It's probably not a change because, well, you could definitely call it a change because you could call these all like equal lows, and then this was a lower low. But the fact that we did create this lower low, we smashed through that support. I always like to look for the zone that led to that. So the zone that led to that is this one here. So it's always a bit of a hassle when I draw zones because I draw them, I'll have my mouse way to the left, but what I'm actually looking at is this candle. It's just if I put my mouse there, it's hard to see the sort of detail of that candle. So if you can pretend I'm looking at that last green candle before the drop, and I go for a supply zone. I go from the bottom of the body, so that's where my mouse is now. Then I hold shift to keep it straight, and then I go to the top of the wick. So that zone there is a zone that I really like now. Now I wouldn't call it a confirmed zone because we haven't retested it, which is the advantage that this zone has. So the fact that we, wicked into that zone and pushed out, that's when a zone is confirmed to me. It shows that I've got the zone in the right place. I don't look at this zone as being super strong because it didn't lead to a change in market structure, right? So the low that came off that was actually a higher low still. So probably better wording than a change in market structure would be like market structure that agrees with that zone, which is terrible wording as a sentence. But what I mean by that is like my favorite supply zones lead to a lower low creation. My favorite demand zones lead to a higher high. So a supply zone that leads to a higher low, I don't consider as strong as one that leads to a lower low. I hope that sort of makes sense. But yeah, it's really the way that I confirm zones is really retests. So that beautiful retest, these wicks here, confirming that zone, beautiful retest. Sometimes you'll see it literally the candle after. So I'll see if I can find where one of those has happened. Not really any here. You could, okay, so this, it's not a great zone, but you could nearly do it here, right? So what I'm looking at there is this low got broken by this move down. So then I look for the zone before that, which I look for the candle before the engulfing. So this, in fact, does anyone have a better way to just highlight one candle than just scribbling around it? Because it works, but it's not super elegant. But I'm looking at this engulfing, right? So that bearish engulfing that sort of, I'd just call it a doji. That's the candle I look for. And then I draw my zone off the doji. Now the reason that I've pulled the bottom of that zone down a little bit is you can see this candle wicked up to there. So I would, it's better when it's exact. Then I'd call it, a perfect retest. But sometimes I will stretch my zones a bit to fit those wicks because it shows sellers were stepping in there already. Price was heading back up, sellers were stepping in from there. So sometimes I'll clean up my zones like that. I think, where are we on Bitcoin? Because I reckon I've done that on one of like my high time frame zones. Potentially, I just lost. Why has that happened? I'm not sure. Well, and you can see, because I was pretty zoomed in when I was drawing that, but right, perfect retest off that wick. So that's sort of why I do like to trim them based on what happens around the zone sometimes, because you'll often see those levels get respected again. And so like so why I love zones so much, right? So if we do the same thing, we go, okay, here was support, we broke it on this move, so where's, actually, do you know what? Does someone want to tell me which candle they would draw their zone on for this zone? So let's just call this A. So I'm talking about that bullish engulfing. That can be B, C, and D. So which candle would you guys be drawing your zones on? C, yeah, spot on. Spot on. So I would be drawing it off that doji, right? Bottom of the body to the top of the wick. Now see how the top of the wick's there? I'd actually go to the top of the candle before. So there is such thing as like 2 candle zones, especially with a really big move out. It sort of just depends. But even if it's not a 2 candle zone, even if you want to just run it, even if you think the zone is just this wick, I would always make it that slightly bigger one because I use the zone for my stop loss. I would want my zone, my stop loss on the other side of that slightly higher wick. So even if it's not, perfectly correct for the zone, it's still correct for where I want my stop loss. And especially because zones can last ages, I might be looking at this way over here where I can't see that. So if I forget that wick's there, I might put my stop just a little bit too tight and get caught by a move up that doesn't actually clear that earlier wick. So that's sort of why I extend them sometimes. But you can see again, right, a perfect touch off that zone, wicked up a bit into it here, held again here, and then we fell out. So then you would expect to see another zone right here, because that is where we got the break of this low, and especially this low, right? This low here, not much of a low. We came up, didn't really retrace a whole lot, but this one, I'm going to get scribbles everywhere. This low, once that breaks, that's a pretty good sign because it was more of a pivot low. So then, let's see if price has respected that zone since. I'm going to forget which zone I just drew. Oh, we haven't even been near it since then. So, yeah, I really like to look for, essentially, what I like to look for, the market structure. So, the lower low forming out of a supply zone or the higher high from a demand zone. Then a retest. These are all the things that give me confidence in the zone. I think give it strength. So market structure, a retest, and the size of the move. Like, I would expect this zone here to be pretty strong because that drop was huge. And that's the same reason. So, like, I've been talking about this zone here for, I think, 2 weeks on my like Monday videos, because that's a big dump out of that zone. There's a lot of other reasons. You know, we've got the 4-hour EQ, there's fibs in there. I think there's even trend lines and stuff. So, you know, if price does get up here, I think it's a pretty good place to be shorting. But that zone alone, I would expect to have decent strength. Doesn't mean it won't get smashed, but, you know, I would expect price to reject the first time it gets up there. And it might not reject much. It could just do what, you know, this bit did and just sort of reject a bit and consolidate. But, I mean, this is the beauty of zones, right? If you were short from that zone, purely based off that wick, and even though price didn't go that far, you still could have got out with a, you know, 3-to-1 quite comfortably. So I'm a huge advocate of zones. I love them. They just, for me, they made my trading really easy. They told me exactly where to put my entry, exactly where to put my stop loss, and they do tend to be well respected. Not always, nothing in trading is 100%, but enough that you can certainly use them to your advantage. So that is my thoughts on zones. Any other questions? Anyone's thoughts on Bitcoin differ? Anyone super bullish on Bitcoin? Because this is something that, like, I struggle with. When I often see what I want, not what I want to see necessarily, but once I get an idea, I've got a real problem with wanting to be right? So once I get an idea, I do tend to fixate on it sometimes, and I will get caught out by that. So because right now, me wanting to be right would be price coming up here, I'm going to be biased about price getting up there probably for a while. You know, unless we start breaking these lows, I'm still going to think price is heading up there, which to me, it still makes sense in terms of price action to me, because I would want to see a decent retracement. We haven't had one. There's sort of a bunch of reasons that I still do expect price to head up there, so I don't think I'm delusional at the moment, but you never think you're delusional when you are, so that's always a big warning. But yeah, until price either gets... I'm essentially expecting price to head to one of these. I mean, you know, it has to at some point. It's unlikely to consolidate between 39 and 45 forever, so I'm going to be right one way or the other, but those are sort of the two key levels I'm watching. I'm not really interested in price where it is at the moment. On the 4 hour, I have been scalping a bit. I've been doing 15-minute fibs. I've picked basically the 2 or 3 trades that haven't played out on 15-minute fibs, so that's been not ideal. I had this one here. Like, my stop was just below this, so that was beautiful, but then it didn't get anywhere near my take profits. Got stopped out on that, and I had one probably 2 days ago, so that hasn't been ideal. But the problem is I've caught all the ones that haven't worked and missed all the ones that have. So you can see there, right? Beautiful bounce. So that's trading. That happens sometimes. So anyway, yeah. Any thoughts? Any charts that anyone wants to share or get me to look at? Any questions on different TA? It doesn't even have to be TA. If you've got questions on backtesting, if you've got questions on psychology, especially if you've got a question on psychology, I love getting those questions, because psychology, I don't know if everyone in here has done the MBA course, but, you know, certainly that's where I learned. And when they used to, when I used to watch it and they used to say trading's 80% psychology, that went in one ear and out the other. I was like, that can't be true. If I can draw the same lines that you can draw, I'm going to make the same money that you make. And it is so wrong, it's not funny. And it took me a long time to realise that. So if you've got questions on psychology, I love those ones. What time frame to consider before entering a trade? Pranav, so it's going to depend on your trading, right? So for me, I always like to have a high time frame bias. So currently I use the daily. In fact, let's go to a chart that I'm not using just in case I muck anything up. I always like to have a daily bias when I'm trading the 4 hour. And if I'm trading the 15-minute candles, not for 15-minute fibs, but if I have, I've got a few other strategies I use on 15 minutes. If I'm trading them, I'll use a 4 hour bias. So I just like having a bigger picture view of where the market's going, using that as my bias for my trades, and then trading alongside that on the smaller time frames. So I also tend to take a really big picture view of market structure. So for me, like on the 4 hour at the moment, so let's say this section here, a lot of people would say the 4 hour market structure was that, and they're not wrong, but for me, I really look at the 4 hour market structure as that drop, then that move back up, and then that drop. So even my 4 hour market structure, it might even be daily market structure to some people. Some people would be looking at that as the daily market structure. And I sort of started doing that both with market structure and fibs, is going a time frame higher than what I was sort of intending to look at, because I was just getting too zoomed in. I was getting too, I'd see like one bullish engulfing and be like, right, this is launching. It'd be in like a massive bear market, and I'd see one bullish engulfing on the 4 hour and be like, right, this market turning around. And then by zooming out with fibs and with market structure, it just gave me a much higher time frame view of the market. And I like to think of like the higher time frames as a weighting. So in terms of WEIGH, not the other weighting, the higher the time frame, the more weight that has on the market, the more people are seeing things move that way, the more money is potentially acting in that way. So if the dailies are bearish and the 1 hours are bullish, I would still be bearish on the market. It doesn't mean I won't take longs, because I might be trading the 5 minutes. And in that case, the dailies are irrelevant. Well, probably not irrelevant, but worth a lot less weight than what the 1 hour would be. But the higher time frames, I think, give you a really big picture view of the market. I also find them easy to trade. I like easier, not necessarily easy, but when I do zoom out to the dailies, I tend to do better than I do anywhere else. But I find it so boring because nothing happens. So there's a psychology issue that I probably should be working on. I haven't bothered to, but I probably should. Top mental psychology books. Oh, it doesn't have to be trading related. I love that. So I'm a big fan of, learning things from anywhere that you can and applying them wherever you can. So on that, I would say Josh Waitzkin's The Art of Learning, I'm pretty sure it's called. Let's have a look. I think that's it. Because that's probably where I learned that concept from. Like, one, he's just a super interesting dude. Josh Waitzkin's definitely the guy. What's his book? Art of Learning. Yeah, that's the one. Yeah, Art of Learning. He is a super interesting dude. He was essentially a chess prodigy, like Bobby Fischer. There's a movie about him called Searching for Bobby Fischer. There's either a movie about him called Searching for Bobby Fischer, or there's a movie about Bobby Fischer and he played the kid. I can't remember exactly how it goes, but it's something along those lines. But yeah, a full chess prodigy, became world champ at probably like 13. It's a long time since I've read the book. And then eventually got bored of chess, went and became a martial arts champion, and just considers himself like a learning, I shouldn't say machine, but yeah, from what I've read, the guy has learning down to a science, or to an art, is probably how he'd say it, because the book is called The Art of Learning. But yeah, so he has a concept in that he talks about, I think he learned some martial arts move from watching a cat, or like something like that. It is a while since I've read the book, but I would definitely recommend that book. Even if you don't get much out of it in terms of your own psychology, it's a pretty cool life story. But it's definitely worth a read in my opinion, and it's not a super long book either. In terms of trading, right? I always say trading in the zone. Now, you've probably read it by now because we've been talking for a long time about trading. But outside of that, I've read Trading Beyond the Matrix, and it's good, but I don't know if I'd recommend it to people. It's a pretty easy one to not enjoy. There's a lot of stuff in it that's not trading related, and I like that. If anyone's familiar with the Sedona method, he talks about that a lot, which I've started reading since. So I actually had I read Trading Beyond the Matrix and bought the book, had it sitting on my shelf, and then someone pretty close to me also read Trading Beyond the Matrix, bought the book, and probably 2 or 3 months later was like, that book has changed my life. It was giving me chills listening to them talk about the book. So I'm only 2 chapters into it maybe, because I'm pretty happy with, I read a ton, but with this I'm pretty happy taking it slow. There's a lot of processes, maybe, probably not the right word, but it's helped me a ton in really emotional states to level myself out. I don't think I've found something that works as quickly as some of the methods that they have in there, which is pretty important to trading. So that's probably another one, is the Sedona method. That's certainly what he recommends a lot in Trading Beyond the Matrix. He has a lot of Trading Beyond the Matrix is about sort of statistics and sort of the bigger rules of having a good strategy. So rather than calling a good strategy market structure and support and resistance, he's talking about things like probability and he's got a value for like how often you stick to that strategy. So if you drop below 95% efficiency on your strategy, that's bad trading, whether you're winning or losing. And if you stay above, that's good trading. So it's sort of the meta principles in some sense, but it's not the most interesting read, Trading Beyond the Matrix. It's kind of dry. I sort of had to force myself through it, but that doesn't mean it's not worth reading. Gets weird. Yeah, it does. Like, it does get weird. If you're into that, it's in a really good way. And certainly, I'm back in the Sedona method, the little that I've read of it. So, some of the other stuff is probably not far off if he's right about that. But yeah, it definitely does get a bit weird. Goggins' book, yeah. I see. Goggins' book's a funny one for me. I'm not big on audio books, and I have it on Audible, and I've started listening to it, I think twice, 2 or 3 times, and not that I get bored, but I just always drop off. I've listened to his interviews with Rogan and Tim Ferriss, if he's done ones with Tim Ferriss, and huge fan, but I need to actually just buy his book, because that is much better for me for consuming these things. I tried to listen to Principles by Ray Dalio and remember falling asleep like multiple times. So the audiobooks just aren't my jam. Podcasts I love. I think it's having one person. I think if it's one person talking, I just zone out. If it's having a conversation, I'm much better at listening to it. Any other books? Atomic Habits, right? I'll always recommend that. Absolutely love it. I just read recency bias probably, but I just read a really interesting one called Think Again, which is by Adam Grant, who, he's known as an absolute productivity guru. It's not about productivity. It's probably a really good book for trading, because it's about being able to question your thoughts and not just get stuck in, this is what I think and I'm not going to change it, and a bunch of stuff like that. It's definitely an interesting one in terms of easy to read, because it is interesting. He's a PhD. He's a professor, and he's prolific in his works. I've heard other people rave about people that I look up to, and I'm like, they do a heap. I've heard them rave about Adam Grant. So, Think Again. Not trading related, but if you're in a relationship or want to be in a relationship, at some point, there's a book called Attached that I recently had someone recommend to me, which I really liked. Essentially talks about your attachment styles, and if your attachment style is not, I shouldn't say ideal, because it's not good to say one's better or worse, but if it's not, if you've got one of the certain attachment styles, it has ways of helping deal with that in a relationship, and things like that. So that was really informative. I sort of, as I read it, I realised a few things about myself. I've got a bunch on my floor at the moment because my bookshelf's full. I'm building a bookshelf, so that's what I'm looking at. Trying to think of what else. That'll do. I mean, that's giving you plenty to go and read. So, deal the 15-minute fibs. Yeah, no worries. So it's super easy, right? It is literally when there's a market structure change. So, and actually, I've got to come up with a better word than change, because it's probably still not a change. It's literally just yeah, it's a high or a lower low essentially. But so the example where I got stopped out. Okay, so let's say that I was looking at that high. So as soon as that broke, I start running fibs. So I would have been running them up here until we had that wick. We got the retracement, and as soon as that retracement comes, I drop an entry on the 50 and one on the 61, and then I put my stop loss below the 78 and any relevant structure. So on this one, there was a zone there, so I put my stop just a bit below that, which actually, if I go to FTX, do I still have that up? Because I reckon on FTX the wick came down heaps further on FTX. So I was just skin of my teeth hanging into this trade. If we look at that, right? So that wick there, and so I got picked up on the 50 and the 61.8 on that, and then I target the 23, the 0, and the 1.27. Although I've been mucking around with that lately. So essentially for that trade, that looked like, I won't put the entries back on, I'll just give it the average entry, which would be roughly that. It'll always be closer to the 61 because I buy more at the 61, so I won't get into that. I mean, I can, we'll see how we're going for other questions. But yeah, so then I target the 23, the 0, and the 27. And I also trail some now. So when I initially built it, I didn't trail any. I just took profit on those 3. And now I trail it. And that's the entire strategy, right? So then once that's happened, wait for another higher high or a lower low, do the exact same thing, and that's it. So I initially developed it I was having trouble with, I kept thinking I needed another indicator or, another tool to get profitable. I was really break even trading at the time. And then I read Trading in the Zone, and he talks about how that's a really common trap for people to fall into, is to just think, I just need this one thing and then I'll make money. And most of the time you already have all the tools you need, but you just haven't put them together in the right way, or your psychology is wrong somewhere. And so that's how you're trying to remedy it. You're thinking that you need another tool. So I read that and I went, I'm clearly in this trap. So what's the simplest possible strategy that I can come up with? And I was like, well, can I build a strategy off one indicator? And then, I don't really like, not that I don't like, but I don't really use any other indicators. And fibs probably aren't an indicator. They're probably a tool, however you want to classify it. But they were the one that I went and mucked around with and found that I could make money literally just doing that. So it's one of I don't use it a whole lot because I don't really want to be trading the 15 minutes all the time. But when I don't like what's happening on the 4 hours, then I'll just get down and bust it out. And it's one of the reasons that I like having multiple strategies, right? Is that, if the market's not conducive to one, pull out another one. Sweet, or walk away, enjoy your time off, whatever you want to do. But I like having multiple strategies. I like being right, so I like being able to be right in all the market conditions, I suppose. So probability of certain patterns. What you want there is encyclopedia of chart patterns. So I actually saw DZ shared that in general chat the other day. I don't know if we left it up because I don't know if it's legal to leave those PDFs sitting around. So I think it was general chat. DZ can correct me if that was not right. But yeah, have a scroll. And there you go. I'm sure someone will be able to find it for you. So it's a really good one. I'm pretty sure I have it. Let's have a look. I might be able to bring it up for you. Of course, mine is purchased legally, if anyone asks. Where are we? So, hang on, you guys aren't looking at it. Let me figure out what's going on there. So I must have to change the screen I'm sharing. Change windows. This is the one. Alright, so it's just a PDF, right? But let's say that you wanted to know the probability of a bull flag. And I really like this. We've actually got, that might be spoilers. I won't talk about that just in case I shouldn't be. Okay, let's try ascending. This might just be slow. Alright, so ascending wedge, right? And then, oh no, what do we got? Ascending, we'll just pull one out of here. Oh yeah, so broadening wedge. So let's just go to page 81. Oh no, that's a terrible way of doing things. Right. I don't normally run PDFs on this side. Okay, so where are we? There's the page number. 81. And so now we should be seeing. We're not seeing it. Okay, let's just scroll down and see what we can find. So this is exactly the data that I'm looking for, right? So I've never heard of a horn top, but you can find the ones that you actually want. And so what it has is, in a bull market, or a bear market, what's the probability of this breaking out to the upside or to the downside? So I don't know what every stat is. I don't know what performance rank is. There you go. So they've even measured the average decline. So once it breaks out, so in a bull market, if it breaks out to the downside, or it looks like a reversal pattern. So let's say it is. So if it reverses, there's a 21% average decline in. He does specify the markets he's measured this on, or she. I'm not sure who actually wrote this book, but they specify the markets that they've based this on. It's not crypto because this has been around for a while, but I think in terms of the probabilities, they're still reasonably accurate. I haven't actually collected the data to test it, but anecdotally, I do quite like looking at this. And you sometimes find some interesting things. Like, I can't remember what the exact pattern was, but like there was a pattern that, say, I thought was more bearish than bullish, but it turns out that in a bull market, it's more bullish than bearish, but in a bear market, it's more bearish. So you can definitely find some interesting things. This would be my recommendation for if you're trying to find the actual stats on patterns. Yeah. If anyone has any other suggestions for pattern stats, then definitely up for it. Oh, you guys have just lost the screen because I exited that. Hang on. We are back in action. Yeah, so that's that. Any other questions? Any thoughts? Oh, how do I go about backtesting? Sorry, Greenie, I just saw that. Okay, so 15-minute fibs is actually my favorite strategy for demonstrating backtesting because it's pretty easy to run through. But I'll run you through the whole process. It's a while since I've backtested, so I could miss things here. But essentially what I do is I'll make a trade plan somewhere of the idea that I think I have. So let's say that you wanted to do, let's do it with like EMAs, right? Let's say that you wanted to buy every time the 50 crosses a 200, which hopefully is what this script will be. We'll find out in a minute. Yeah. All right. So let's say you wanted to buy or sell every time the 50 crossed the 200 EMA. I would then write a trade plan. So I would say, like, I've got to do it all here, but I do it in Google Docs or Evernote. But if I change what I'm sharing, you guys won't be able to see it. So what I would say is, like, all right, my strategy is, let's call it golden cross because that's typically what this cross is called. And I would say when what are they? 50. When 50 EMA crosses up 200 EMA, buy. Then you want rules for your exits. So let's say stop loss below, let's just make one up, fifth candle, or no, let's call it lowest of 5 previous candles. Take profit. Let's take profit when the reverse cross comes. So TP, that's typically called a death cross, so we'll just use that for shorthand. TP at death cross. Is there any other rules we need? Risk management. I don't actually use risk management when I'm back testing because I just assume 1% because it makes all the back testing calculations easier. So we've got all our rules. We've got entry, we've got exit. We're not going to manage these trades at all for simplicity. That should be everything we need. So that's now my trade plan that I'm going to go and back test. And then what I do is I have a backtesting spreadsheet. So there we go, beautiful. Hang on, let me add that as a new tab. So you can see there's a bunch of different strategies that I've tried here. So what I would do is add a new sheet. In fact, I think I've got one that I duplicate so I don't have to make a new sheet every time. Maybe not. Let's just duplicate. That looks like an easy one. So let's just duplicate this one. Call it golden cross. Oh, hang on. Helps when you're typing. Golden cross. And then get rid of everything there. And so then all I do is start logging the results. So I would come to the replay. I'll make it so I can't actually see the candles because otherwise you can bias yourself. With one like this, it's pretty easy to not bias yourself because you literally just every time it crosses. But if it's more subjective, you know, if you have to think about things, then you're really not going to be able to see the candles before. And especially, it's hard with Bitcoin, right? Because I've been trading for so long. Even if I don't look at the date, which I never really do, but when I'm backtesting, even if I don't look at the date, sometimes I'll start to remember what happened around that price. So it's kind of hard to backtest when you do know that. But you can always go and find different coins and things to backtest on. But so I've got my trade plan, which is off the screen now, but we can all remember that. Just buy on a cross and sell on a death cross. Oh, because so that'd be the other rule. When we get a death cross, we take profit on our long and we open a short. Call that. And then I've got my spreadsheet. So that's all I have. So I have them. If you've got multiple screens, perfect. Have them all up at once so you can see them. If not, just make do. That's what we'll do tonight. And then I just play through. So we'll slow it down a bit. And so there we go. So we get our death cross. That's across the downside. So our rule for our stop loss was 5 most recent candles, and then look at it'll be the high for a short. So we'll go above this candle here. So let's say we would have bought on the. You need to wait for that candle to close to confirm the cross. So that's been confirmed. That's why we got that signal there. So let's say we've immediately shorted that. Our stop loss is here, and we don't have a take profit because we just take profit when we get the golden cross. So then we let that play out, and so we're assuming 1% risky. So there we go. So I've just been stopped out. So my result here is a -1 because my risk to reward that I achieved. So this is how I think of it. Risk to reward achieved is -1. Whereas if we had got down to here, then my risk to reward would have been 6.18. So that's how I think about losses. Is a negative risk to reward. A negative risk to reward achieved essentially. If that's not super simple for you to understand, don't stress. There's more coming on that in a few other ways, so don't worry too much about that. But it's a really easy way to log things. Anyway, so then all I do is wait because we haven't had a golden cross yet. So I've been stopped out. We're not actually in a trade, and then we're gonna get. Are we gonna get a golden cross? Let's speed it up a bit. No, so now we missed the drop, so that sucks. So maybe our stop loss rule is no good. You don't want to change. You don't want to change your trade plan until you have at least 20 bits of data. I think that's his rule in trading in the zone. So you wouldn't just look at that first trade and go, "Oh, my stop loss was way too tight. I'm going to change the rule." You want to get 20 bits of data. So just here we've had a golden cross. So now we're going long, and we look at the 5 most recent candles. So 1, 2, 3, 4, 5. So we'll be under this one here. And then we slap that on. So we would have bought up here. Let me think. When did that cross actually happen? Was it? Okay. So we got the cross here. So we're actually buying down here. Would have been that close. Stop loss would have been under this. And then again, no target. So we'll just put that way up. And then we just let it run until we get a death cross. Or we get stopped out. So we got stopped out. So there we go. We've got another loss. And the other thing is, I would often record which cross. If I was actually doing this, I'd record which cross. So first was a death. That was a golden. And the good thing about this is they're literally just going to go one after the other. You're never going to get a death after a death because it can't happen. So you can just duplicate them way down. So you're having a tie. And then same thing. So just run that until I get a. What did we just have? We had a death cross, so until we get a golden cross. No, I think we had a golden cross. I can't even remember now. I don't know where we're at. But, that's pretty much it. And so at the end of that, you'll have some data and say, let's say that this one was a 3, that was a minus 1, -1. Then we got a 20 because price went on an absolute tear. Then we got a 0.5. Then we got a -1, a -1, a 9. And so then all you have to do is sum those up once you have enough data. So he says 20 before you start tweaking things in a trade plan in trading in the zone. I like to get at least 50 before I actually trade a strategy. And the more the better, right? And especially what you can do sometimes is have the one strategy but have little tweaks and have them all going. So let's say that we also had like a managed stop loss rule. Then we could have this section as untouched stop loss, this section as managed stop loss, and then record both those for each trade, and then you can compare those. So that's how I like to backtest. Does that sort of explain things, Greenie? Or you got any questions on that one? Beautiful. That's always good to hear. Packeteer, no, I missed your 40k support question, so let me know what you're thinking there. And hope I haven't missed any other questions. Yeah, Greenie, it's backtesting is one that most people don't do, and I can understand why, right? It's not. I used to think it wasn't super fun, and I've sort of come full circle on that because a lot of the time in the market you can't do a whole lot, and so rather than like going through 1,000 coins trying to find a pair, I think you're better off backtesting. And you can make it fun. Like when I backtest, I'll sit here with a coffee, blast some music, because you don't have to be thinking all that much. You know, it depends how complicated your strategy is, but when you've got a simple strategy like that, it doesn't require that much brain power. So you can sort of just, you know, put on a podcast or whatever it's going to be, and just, you know, go through the motions. And in an hour, you know, if you want 50 trades of data, then you're talking. If one trade a minute, that's an hour. So, you know, you can get a fair bit of data pretty quickly. There is also ways to code it. So if anyone knows how to use PineScript, you can code strategies that will go back and, there you go, strategy tester. Out of my wheelhouse, Donnie, I think, would be much more across that. But, you know, we've both spoken about it. So I started learning PineScript at one point because I was like, man, like if I can code some stuff up, I'll be printing money. And then I realised I was probably going to spend more time learning to code than what it was going to take me to just make money off the charts. So a lot of people fall into that same trap. They're like, I really want to learn Pine. And there's nothing wrong with it, right? Like coding is probably one of the most useful skills you can have in this time. But, you know, don't lose the forest for the trees, I suppose, is the thing there. Because I was getting caught up in coding and then I was like, hang on, I don't want to be a coder, right? I don't want to spend time in front of the screens. And, you know, if I'd gone far enough down, I'm sure it would have helped me. I've seen some incredible indicators that people have built, especially, you know, if you can build an indicator that a bot trades for you, then you free up your time beautifully. But I just realised I was going to put a ton of time into learning to code to get to the point I could free up my time, or I could get good at trading and free up my time quicker. So, yeah, it's just whatever you prefer, what suits your personality. But yeah, Greenie, it's all about just tweaking things, right? Like one of the ideas. So I've got a big list of things I want to test at some point that, you know, grows way faster than I ever test it. But one of them is with how I use zones. So let's put this zone on, right? And probably just be a little bit. There we go. So with how I use zones, I've noticed that a lot of the time price will, when a trade goes well, price will touch that zone like to a T and then reject. A lot of the time when it goes badly, it'll push up into that zone at the same time as it enters. And so what I was thinking about with that was, well, why don't I start having my entry right on the zone? You know, similar. So I front run them a little bit, so I probably still would have missed this trade. I probably would have had it just above. But if I use my current system, let's just say we're targeting there. That's a 3.37. But I realised because most of my best trades reject perfectly off the zone, I could drop my stop loss halfway into the zone and I'd get wicked out more, but on my good trades, I'm doubling my risk to reward straight away. So if that increases how often I lose by, let's say, 10, 15%, but it doubles my risk to reward every trade, that's going to jack my expectancy up a ton. Like that's a trade-off that's easily worth making. So there's always, and it's an idea I've had that I haven't gone and tested. I've got some ideas with Vemma that hopefully I will be able to test some of these things that I've thought about for a while that I just haven't bothered to make the time for. But it's, you know, you're always going to have little tweaks, little ideas. And that's really what it's about. You take these things and, you know, if you find that they do work, go and change little bits of your trade plan. I always like to think of it like your trade plan's like a rudder that steers a ship, right? And so if you can get more information and you know, get your rudder a little bit more in line or trim your sails, or I've only just started sailing, so I need to get more in tune with the lingo and give the better metaphor. But you're just making little tweaks, and they all just bring you a little bit closer to where you want to be going each time. Hopefully, if they're going the right way. 40k seems to be solid support. Just wanted to hear people's thoughts on whether they think it'll hold. Yeah. So everyone else, what are you thinking? What do you reckon is going to happen at 40k? We will zoom out and drop your thoughts on 40k in the chat. So let's just put that. Where are we? Yeah, so Packeteer, I'm actually kind of dirty. I shouldn't say I'm dirty because I don't actually care, but I did so when I was at uni, I did physics, and a lot of physics these days is done on computers, and a lot of professors code their own stuff. We didn't get taught any coding, and then we had a lecturer in second year who was like, check this thing out on MATLAB. You guys should do this, and I was like, we've never learned how to. Now that was partly my fault. I never thought to take a coding class. But I do think in physics it probably should be mandatory. I think they actually made it mandatory a couple of years after I left, so that is what it is. But I honestly think I would have liked it, right? I love problem solving, so from what I've spoken to the devs in Bema, I think I would have liked it. But then I also think about how much I hate sitting in front of screens all the time, and I go, I don't know. Would have been an interesting one. So Jay Smith, you reckon 38k? So we are looking 38, 1, 2, 3. What's your reason for 38k, and what's your reason for 40k? Fast Baggy also thinking 38. 40's been tested several times. D Bozic, I've just seen your chart, so I'll have a look at that in 2 secs. We'll do this and then we'll go. So 38 in the middle of a demand zone that has yet to be tested. So I'm going to assume you're talking about this zone. Because that is the zone that I am looking at. I'm arrogant like that. I like to think that everyone sees what I see. Yep, beautiful, that's the one. So I lean towards 38, to be honest. And the main reason for that, in my opinion, is that this zone here, so based on, where's my drawing tool? Based on that, right, before we pushed up, made that higher high. So that should have been a strong zone, and you can see here it got front run, but it was. We had a massive buyback off it. But we've now wicked through that entire zone with that wick. And so once the zone is pierced like that, I don't really expect it to hold. It shows that there's not much buying strength there anymore. So if you look at the current candle, it's bullhammer-ish, more of a doji, but slightly bullish. So we could start to head up. There's nothing saying we won't. But once these zones get pierced, I sort of expect, if price does start heading down again, 39 would be where I'd really expect to find buying support again. So this wick here is probably important to pay attention to, because I think I spoke about this on my Monday video, right? I missed that wick, and it was respected beautifully when we came back, so we'll identify that. And then there's a 4-hour zone within this daily zone, so just like that. And one area that I'm really interested in is this little zone here, right? There's a little 4-hour zone at, what price is that? 37k. I think a lot of people could potentially be seeing 38k. This zone I would consider a really strong zone because we got new market structure out of it. So we broke this high, formed a high up here, so that's always good. Came down and retested it and bounced really, really well off that retest. So I think that's a bit of a zone that I haven't seen anyone else talking about. To be honest, I don't pay a whole lot of attention to what other people are talking about, so everyone might be seeing that zone. but it wouldn't surprise me to see price tank through the 38 to catch a lot of people out and then bounce off this 37 zone. Now it's only a 4 hour zone, so that is going to be weaker than a daily zone, and expecting a 4 hour zone to stop a big daily sell-off it's not impossible, but the strength of a 4 hour zone isn't as strong as a daily zone on average. So we could, if price tanks through 38, I would be excited to be buying off 37, but I would be getting a bit nervous about where the price is going to bounce. The thing is, you get a massive risk to reward off it because it's a pretty small zone, so that's always nice. But certainly this daily zone I think is sort of the next logical spot, right? The next logical spot we find buyers. If we do bounce where we are right now, I still lean towards, you got your daily pivot up here. Right there, and you've got there's a 4 hour zone. We'll go down and find it. There's a couple of 4 hour zones in here actually. So again, I would put this wick on. You might ask, why don't I put that wick on? Pretty much just because it's going to make my zone huge, give me a massive risk to reward, and it's just a little bit earlier. There's also a zone there that's essentially that pivot. You can see that was retested. You could draw a zone in here, right? So I'll sometimes end up with about 20 zones in one area. You could draw a zone here based off of that, but the fact that that wick's gone right through it, I probably wouldn't bother. And then there's a bunch of other reasons that I think if price gets back up here, it'll be a pretty good place to open short. We've got that 4 hour EQ. There are downtrends on the daily, depending on how you draw them. And if you want more of a line of best fit, it'd be looking something like that. And then, you got fibs and a few other things. So, yeah, if I can get a short from here, I would love that. That's sort of my ideal place. So this is something else, right? I never think about, okay, like, how do I trade this market? I more think about, like, what trades do I want to take and then let the market come to me. So instead of looking at this and going, okay, if we get a bull hammer, I'm going to buy, I go, you know what? That is an area that I would love to sell. I don't care what we do before we get to that area. I am quite happy to be selling in that area. It might take 2 weeks to get there, but I would love to sell there because that, to me, looks like a really good place to be selling. And then I just let the market do whatever it's going to do. Same thing to a lesser extent with the buys. Because I have the daily bearish bias, I'm a bit nervous buying, especially with the size of this daily zone, because I'm not going to get a great risk to reward. If I buy at the very top of it and I ignore my 37k level, I'm only getting it's a 3.5. It's not awful, but it's not awful. And especially if I stagger in, then I could potentially get a pretty decent risk to reward. So now I do kind of like that long a bit more. But one of my rules is if a trade goes against my high time frame bias, I use 0.5% risk. And if it goes against both my high time frame and current time frame bias, I use 0.25. So because my daily time frame bias is bearish and my 4 hour time frame bias is bearish, I'd be taking that for 0.25 risk. So I'm not going to make a ton if I'm right, but the option's still there, I suppose. No worries. Catch you later, Tin Wookie. Hope you have a good one. 39,500 seems strong on previous monthlies, which would be... So that's that drop. It's a bit of a buyback. It's not super convincing, like it was a doji. But who's to say, right? If that's a doji, we've had a bearish engulfing doji. This could close a bullish engulfing. We get a morning star. We start running again. It's always possible. Packeteer leverage. I don't have a set leverage, right? I've never understood when people like never go over 10x. Not never understood. I think never go over 10x is a great rule for beginners because if you don't understand the maths of trading, then it's easy to get into trouble. If you understand the maths, like I used to use 100x leverage, no worries, when I was scalping because my stop loss was like 0.1%. And so you can use 100x and you're only actually losing 10% of your margin. So I don't have a set leverage. I don't like when people have a set leverage or a set stop loss percentage, or even a set position size. I think all those are flawed ways of thinking. All of mine change every trade. All I care about is the amount I risk. So like in terms of account risk and my risk to reward. Every other number in trading I think is irrelevant. Entry price, I see people track entry price in their journal and I never understand it. It's not a data point that you can use for anything useful. except potentially profit, and you can figure out your profit other ways. So risk to reward and account risk are the two things that I think are super important, and everything else not that much of an important detail. Yeah. So yeah, it's interesting because not everyone does. Not to criticise, I won't name names, but some of you have probably heard someone talk about how they always use a specific position size and use any stop loss from a 0.5 to a 3. I've always thought that is a terrible way to teach risk management, because let's say that I do that. So let's say that I always trade one Bitcoin, and I use anywhere from a 0.5 to a 3% stop loss. And let's just say that I always target 2 to 1s. All right, that's near enough. That'll do us. Ignore those percentages. Let's just call them 0.5. That means that... Actually, hang on. Let's make the maths easier for me. No, we'll use that because that's... I don't know if I want to get into this. I won't get into this because, one, it's a little bit hard to explain, and two, yeah. But if you've heard someone tell you to do your risk management that way, don't. It's really flawed thinking, and you can run into trouble. Because, so essentially what can happen if you do your risk management that way is you can have a string of wins on a 0.5% stop loss, and every time you're making 1%, because you've got your 2 to 1 risk to reward. So let's say you have 3 wins, you get up 3% on your account. Beautiful, that's great. Then you have 1 loss, but on that loss you use a 3% stop loss because your rules are anywhere from a 0.5 to a 3%. The fact that you don't change your position size based on that, and you always use the same position size, means when you lose on that 3% trade, you lose 3%. So you've just wiped out 3 trades worth of gains with 1 loss, even though your risk to reward is always 2 to 1, because you constantly use the same position size. So don't do it. Bust out a calculator. Mine is floating around somewhere. I'll chuck it. I don't know if anyone needs it, but that's the one. I will chuck it in. Actually, I won't do that while I'm right here, but I'll chuck it in the... We probably should have a tools section. I don't know if we do. That's a good point. But I'll put it in general chat or something. And even better than that is give it a month, and Vema will take care of that for you. You won't even need to bust out a calculator. So, yeah. Yeah, cheers, Fast Baggy. I do love it. I'm pretty proud of it. Especially, because I'm such a staggered entries fan. I really like using it for that. It makes things a hell of a lot simpler. Any other questions? Any thoughts? Oh, no, I've got to go over D. Bozik's charts. So, I won't be able to show you guys... No, actually, this should work. Yeah, perfect. Perfect. So, this is the chart that I got sent. Okay. And I'm looking at the zones. So, what I would say, this top zone, I would actually use... I can't annotate because I'm not in Zoom. You're going to have to just go off my mouse, right? I would use the candle under my mouse right now. So that green, probably call it a doji, because that following candle was an engulfing. So I would go off the low of that close to the high of the wick. Where you've done it is potentially also a second zone. So you will often find zones sort of clustered because of the size of that drop, right? Because of the size of the move out from there. There's really nothing wrong with your zone there either. I would pull the top up a little bit just to cover that wick, but certainly nothing. There's definitely not a zone there. Like if you're drawing a zone in the middle of that bearish engulfing, that big one where my mouse is, if you had a zone there, I'd say nah, no zone. Where you've got it, definitely consider that a zone. This second one, love it. That is exactly how I draw my zones. Pivot. You've used the low of the close. You've used the high of the wick. You can see it's been retested over here. So that is definitely how I do it. I would also have a zone. So when we broke that low, I'd start looking for zones. So potentially have one there. This demand zone, I would... so actually this is a really good example, right? This demand zone, because the engulfing is engulfing another green candle. But to me, it doesn't matter what color the candle is that gets engulfed. I'm just looking for that engulfing candle and then looking at the candle before it. So I would use this green candle here because it's not engulfing the bearish engulfing before it. It's a smaller candle. I would use it, and I would have the bottom of the wick to the top of the body, which is essentially that whole candle anyway. And for this one here, I would own like this very last one. Let me scroll across. I'd only be looking at this red candle. So that's, I mean, the thing is it's been respected, but it's a huge zone, which is one thing. But also, yeah, I'm looking for the candle before the engulfing. So from the engulfing, I'd go to this red. So it's a bit of a, well, it is a bear hammer just on support. And I would just use the body because it doesn't have a wick to the downside, which is what I want in demand zones. It's just a body. I wouldn't really be too concerned about the wick to the upside. Now, there is also another type of zone which I haven't spoken about. So I'll run through that quickly. Just let me check the chat. So D Bozic, does that answer your question? Do you have any other questions or thoughts on that while I'm still on your chart? I'm going to assume that's a no. I've explained that better than anyone could possibly have explained it. It's a perfect explanation. And we can move on. But the other type of zone that I do use, if I can delete this, yeah, I can, yeah. The other type of zone that I do use, I'm going to have to find one, but it's called a pause zone, right? So a pause zone is, in my opinion, not as strong as a pivot. In fact, there's probably one in here, right? So let's just highlight that. It won't be a 4-hour zone though, so let's go looking. Interesting. If it's on the 1 minute, I don't think we're going to find it. I don't know if the data will go back that far. Yeah, there's not really a good one there. Okay, let's see. In fact, let's go back out. There was a really good example on one of the Forex pairs recently because someone put a chart up and I spotted it. Oh, that Euro trade is not looking good. But again, right, first... Oh, actually, this is the perfect example. Okay, beautiful. So, this is what I call a pause zone, right? So let's get rid of that trade, which luckily I didn't take because I don't have any money in my Forex account at the moment. But I quite like the look of that, to be honest. See this zone here that I've marked off? That's what I call a pause zone. So, where the zones I've been speaking about before are all pivots. So, you know, these two, price came down, bounced out from here, moved up, retested, bounced out, came down. This zone here as well, which I've trimmed. So let me get rid of all those scribbles. So I've trimmed that zone because of this retest. That is why that zone's looking like that when, you know, technically the candle's up there. But because it wicked down to there, I've trimmed it down to that. This zone here is not a pivot, right? You can see that it's in the middle of a move up. Yeah, price consolidated a little bit, but it didn't retrace and then pivot up. This is what I call a pause zone. Now, a pause zone I typically consider as being weaker than a pivot. You can often, if you go to a pause zone, if you go to a pause zone on the 4-hour, you might find like a 1-hour pivot. So, you know, you might be able to think of them that way. In the same way that I talk about 4-hour zones being weaker than dailies, you could just consider all 4-hour pause zones like a 1-hour pivot, or, you know, however you want to do it. I just think of it, you know, slightly weaker. They still definitely get respected, not all the time, but, you know, neither do pivots. But I've definitely seen them get well respected. But just a weaker zone than a pivot. Anyone who can't remember the bloke's name, but I originally learnt zones partly from Donnie, partly from another guy, and he talks about base drop rally. So that would be base drop rally. So base drop rally, and then rally base drop. I think that's it. Yeah, AFX. AFX is an absolute gun. And there's like Ninja Trading, or I can't remember exactly what it is, who's got a bunch of PDFs. You have to pay for them, but they were, I don't know if I pay for them as someone who's paid for them, but I did learn a lot from them. They're definitely worth spending money on, but these days there's so much free stuff, you can probably get the same information. But yeah, he talks about rally-based drops and then also like rally-based rally. So so I don't think it's rally-based drop. It must be. Oh yeah, no, it is. Yeah, I just mean I don't know what I'm talking about. Rally-based drop. Yeah, so the base is the pause. Is the consolidation before the pivot. So that would be a drop base rally. Yeah, that's what I've been trying to say. Inner circle. Potentially, yeah, Dinero. It's a long time since I've read those PDFs. I do have them floating around somewhere. I think they're on my old computer. Anyway, what I'm getting at there is pause zones are typically weaker, but they tends to be respected. And then look at, that's a perfect bounce off that zone. Hasn't gone very far. Rejected well off the 61.8 from the downside. But yeah, so the pause zone is another type of zone. Pretty similar rules. If it's been retested, I always think that's a bit stronger, but a bit weaker than a pivot zone. So there we go. There's a perfect pause that's been respected, right? Market in a big drop, paused a little bit, tanked out of it, and then that's been respected since. So that's a really good example of a pause zone. Okay. I'm going to wrap up soon, but I'm enjoying this a lot, so I'll give it one more question. First in, best serve. If anyone's got any, otherwise we can just wrap up. Yeah, cheers heaps, Greenie. Got to paint the camper. I'll put some photos up. Love to see it. I was going to post my thing, so hang on, I can do that while I see if anyone has another question. Because I think I've made a copy that I share and one that I don't. So I'm just going to remember exactly what I've done with that. Here's the go there. Yeah, I assumed everyone can hear me, Dinero. I was just wondering if anyone's got one more question. Otherwise, we'll call it a night. I'm going to go eat some sauerkraut and it's basically like a hamburger in a bowl. Oh, someone's trying to talk to me. Oh, I might have everyone muted, so hang on. Yeah, I've muted everyone. It's just easier. Packeteer, are you trying to talk to me? Let me see if I can figure that one out. Use a volume maybe. Let's see. Oh, Packeteer, the van. It's coming. It's very slow going, but it is coming along. So I'm finally putting a bed in, which I've been saying I'm going to do for ages. To be fair, I have been working on some things, but it should be a lot further along than it is. But yeah, the bed's finally going in, so that's fantastic. And so I'm pretty sure you guys can see it in the camera. Let me figure out what you guys are looking at. If I come back to the live stream. Your camera's not coming up. If you guys can see me, that's the oven, that's the fridge. So I've got the stuff that's ready to go in. I just have to actually get around to putting it in. But yeah, I'm still loving the project, which is always a good thing. Oh, you can't see. Okay, I'll figure that one out another time. I thought, maybe I've got it on. Where's my stream? Must be on OBS. No. Maybe it's because OBS is running. Let me close OBS. Oh, I'm recording. Oh, no. Too much going on. We'll deal with that another day. Claire has a crossword question, which I rate very highly. So, fictional virtual reality system launched in 2022, 8 letters. Metaverse would be my first thought. METAV. No, that's more than 8. Sandbox. No, that's 7. Not my area of expertise, but does anyone know? Virtual reality. What was the one that we were looking at way earlier? Right at the start of this call. Wonderland. No, that's going to be way more than 8. Might start with an M. Have I miscounted Metaverse? Because that M... No, that's way too many Metaverse, yeah. Oh, what's the one that Donnie got real estate in the bullpen? Yeah, that's it. The tough... Yeah, right when we're all trying to go to bed, Claire, you've got us here. This is going to keep me up, too, until we figure it out. So, hang on. He's using Google cheating, because I'm about to do it, but I don't know if that's against the spirit of the game. I wish I could remember which one we got real estate in. Oh no, because if it's a virtual reality system, they might be talking about like Oculus Rift and stuff. I know that's like the goggles, but I'm leaping straight to virtual reality worlds. But if it's a system, it might be like what it runs on or something. The IDO tonight, I thankfully can skip it because some of the people that I'm in a pool with are staying up for me, so that's fantastic because I don't want to be up in the middle of the night. But it's kind of fun, especially if you get a bunch of mates on the call at once. Everyone gets up at 2 a.m. It is kind of fun, but I'm pretty happy to be sleeping tonight. Virtual reality. Launched in 2022 too. That's only got 20 days that it could have been running for, so that's not very long. Well, I think that stumped us, Claire. I don't know if anyone's going to get it, but chuck it in the general chat. See if anyone can get it in there. Matic? I know that's not 6, but have they launched something? V.